All right. Welcome everyone to our webinar here, 4 Common Mistakes in SaaS Financial Statements and Forecasting. I'm seeing more people roll in, so we'll give folks just a few seconds to join. We are very excited to have you here. And as you can see, we have a power panel with us, and I'll do introductions in just a few minutes. Okay, I see more and more folks are rolling in. Just a few seconds. Okay, I think we can get started here. So once again, welcome everyone. We are glad you're joining us this afternoon or morning. And today we have a very packed session, which has a lot of content, which you'll walk away with and immediately be able to put to action. Our panelists today are Ben, Brad, and Ryan. Ben, also known as the SaaS CFO, is extremely passionate about SaaS and subscription metrics. He's a fractional CFO and current CPA credential holder who has been consulting small tech companies to multi-billionaire companies for over 9 years in SaaS. You can join him on his vibrant finance community at thesaascfo.com. We also have Brad, who's a customer of Giraffe. And Brad has been an entrepreneur for over 20 years, but he started his first SaaS company, Evercast, where he's the co-founder and COO. And Evercast is used by Hollywood advertising agencies, gaming companies for video collaboration. The company saw a 1,400% growth during COVID because of what it does. And we'll hear directly from Brad about some of the lessons he learned during this crazy growth. And finally, we have Ryan, who is at Giraffe. He has been in SaaS for a very long time, but he has been at Giraffe for almost 5 years. And during this time, he has helped hundreds of companies go live with their FP&A on the cloud. So with that, let's go through some of our learning objectives today. First, you'll hear from Ben. He'll talk about what are some of the common missteps he has seen founders and management teams make in his 9+ years of SaaS CFO experience. Then, like I said, you'll hear from Brad how exactly his company dealt with these issues. And then finally, we'll wrap it up with a live demo in Giraffe of how we make it really easy for SaaS companies to be off and running with FP&A. So just a few housekeeping items. If you have any questions, drop them in the Q&A tab, which you should see in your Zoom. And most questions, we'll cover them as we go along the session, but we might save some for Ben at the end of the presentation, but please go ahead and drop them as you think about them. If you want a replay of this session, we'll be sending you a recording after the session via email. And we'll also send you a link to the slides so you can take notes or go back and reference them later. I encourage you to be very engaged and go on social. Our accounts are there, Go Giraffe, and Ben's account is the SaaS CFO. And let's start posting about what you're learning, and we're happy if you're posting screenshots of things you're learning from this session. With that, our first engagement is going to be learning about you and what you would like to learn in this session. So I'm going to launch our first poll here, which is about whether you work in an accounting firm or not. This is mostly so that we can get a sense of how we talk through the rest of the day. Okay, I'm going to give 10 more seconds here. And still seeing some answers come in. All right. Looks like we have an almost even split with 44% working at an accounting firm and 56% not. that's great. We know we have a mix of people who are existing customers of Giraffe and people who are new, but that's great for us to know. All right. With that, I'm going to hand it over to Ben, who is going to dive into the meat of the discussion. Take it away, Ben.
Yeah, thanks, Shreyas. Appreciate that. Great to be here. Brad, Ryan, great to see you guys. So 4 common mistakes that I see in SaaS finance, and I see this over and over working with hundreds of SaaS companies, and it's just a pattern that comes up, and things we have to do to improve our chart of accounts, our financials, so we can truly manage our SaaS business in the right way. And the 4 big things in SaaS that we've got to get right, first is the SaaS P&L structure. And again, I've reviewed hundreds of P&Ls. I'd say most of them, 90% are usually wrong or incorrect, and 10% are pretty close. And then the second is chart of accounts. So we've got to have that underlying structure correct that I call SaaSified for our SaaS companies. And then 3, department coding, really important so we can create the proper SaaS P&L. And finally, in SaaS, maybe like other industries, revenue recognition, so important that we put that in place at the right time for our SaaS company. So those 4 common mistakes, and we'll roll into the first one here with the SaaS P&L structure.
Right.
There we go. So the SaaS finance maturity progression, so before we even get to the metrics and my metrics framework you see in the top right, of course, we want to calculate all the metrics for a SaaS business, but it always starts with our accounting foundation. So first with the chart of accounts, getting that right, getting the department structure in there, the right GL accounts for both revenue and expense, then creating our SaaS P&L, and then finally, the last piece is calculating our SaaS metrics. So that's the maturity progression that I go through when I work with my SaaS clients, my fractional clients, to get them up to speed on their SaaS finance. And then next slide. So we'll talk about the SaaS P&L. And I know for a lot of the accounting folks out there, this is probably a very familiar P&L. Whether it's exported out of QuickBooks, in this case, or Xero, or whatever accounting system you're using, those structures, those out-of-the-box structures for the P&L that comes from the accounting software doesn't work for SaaS, right? This is too difficult to read. There are too many categories. And with this, the gross profit guaranteed is incorrect in this structure. And we really can't calculate our metrics or know where we're investing in our SaaS company to guide it. With the properly structured SaaS P&L, there's so much information that we can take, and then that feeds our SaaS metrics. So I think then in the next slide, we should have the SaaS P&L format. And of course, in SaaS, there are no standards, but I'd say this is as close as it gets to a SaaS P&L standard that makes it easy for us to manage our business. And 2, also, if you have investors, potential investors, your board, making it easily consumable for them. Think about that previous P&L. If you gave that to your board, would they really understand your financials and your performance? I say no way. So a P&L like this, we can see clear and distinct revenue streams. We've got our COGS structure set up correctly. And then we've got the OpEx structure set up correctly as well, R&D, sales, marketing, and G&A. So of course, there could be many more revenue streams within SaaS, maybe a couple more departments in COGS, which depends on the revenue streams. But with this P&L, we can really see the performance easily, the proper gross profit, and then down to EBITDA and wherever we're taking it, if we're taking it down to net income. So of course, that's just the start. With the SaaS P&L, important piece to manage our SaaS finances, but we have to look underneath of the hood, our HUD, to really understand our SaaS company.
So, as a founder, and Ben, I have given P&Ls like that to investors in the past. And if you want to see what a deer in the headlights look like, that's how you do it, right? So before we were using Giraffe, I was, of course, using spreadsheets. And, I'm sure I saw the poll that you guys just did, and maybe half of the people in here might be founders. Using spreadsheets, I kind of have a love-hate relationship with them. And especially when it comes to financial management and financial forecasting and stuff, I've been using spreadsheets for, literally 10 years. And then all of a sudden when Giraffe came about, it kind of changed my life because it's like a spreadsheet, but it's not a spreadsheet. So anyone who's familiar with spreadsheets are really going to like the way it works and the interface and stuff like that. But it's far more powerful than a spreadsheet. And when it comes to specifically like financial forecasting and budgeting, but it's super familiar, which is why when you first use it, it's a little bit confusing and stuff like that. Once you get into it, you start realizing how much it's like a spreadsheet, and it becomes very familiar and easy to use. So, pro formas are really important when it comes to raising capital or when it comes to updating your board and that type of thing. And it's really nice with Giraffe that not only can you model out your forecasts and stuff in Giraffe like you do in a spreadsheet and make them really complicated or make them as simple as you want, but also, and I think they'll show it in this demonstration, but their reporting functionality where you can take all that data that you do and create these custom reports is super, super powerful. And it allows you to basically show exactly what you want to the investor or to your board without showing anything that you don't want. And I'll end this slide with something that an investor once told me, that as a founder, the point of a pro forma is to show investors that you're giving thought into what makes your company tick, right? And so one of the things that one of my investors said when I brought them my first kind of Giraffe report, they really appreciated the level of thought that went into, what makes up Evercast and how we operate and, where we're going. That level of detail that I was able to show them very clearly really impressed them. And it went a long way for us to actually raise that round. So there's many benefits to using this platform all over the place.
All right, and I know there's a question in Q&A about chart of accounts, so perfect timing. So now we talked about that SaaS P&L structure, and I believe the slides will be handed out after, so you can have that structure. But next, chart of accounts, right? Looking underneath the hood, and the key to the proper accounting foundation within SaaS companies is the chart of accounts. So we've got to look, of course, beneath the hood to get that set up correctly. I call it, SaaSify that, so then that makes our life easier down the road. So the chart of accounts, for my accounting friends out there, exactly what this is, but simply a numerical and descriptive listing of all the accounts of our general ledger from our balance sheet to our income statement. So pretty straightforward. This is where all the debits and credits happen for the non-accounting folks. And then in the next slide, so with the chart of accounts, this is where we're going to define things. So at the most basic level, we've got the GL account number and name. And then we categorize these. In this case, we're starting with the balance sheet here. So you can see, if you haven't seen a chart of accounts, really underneath the hood, how we create those financial statements. We've got all these individual accounts. We put the debits and credits there, and then we categorize them. All right, this is a balance sheet account, current asset, cash, and so on. And then that rolls up to create the totals within our financial statements. So a big thing within SaaS that I always look at with new SaaS clients when I'm coaching SaaS companies is first the revenue definition. So we have to, it's so important in SaaS because you've heard in SaaS, right? You're valued off your ARR. That's one way to value a SaaS company. So we have to have clear and distinct revenue streams. We can't mix revenue streams. For example, we don't want to mix subscriptions with one-time services. And even now in today's market, usage-based pricing so popular. So all those variable revenue streams, whether it's usage, transaction, processing, et cetera, we want to keep that separate from subscription revenue as well, because I see a lot of companies just lump that into recurring. And we need to separate that, one, for our metrics, because we're going to run retention analysis separately on those, and maybe we'll combine it together if it shows an even better picture. But again, underneath the hood, we have to make sure we're coding revenue to those distinct general ledger accounts. And then from there, if you have a couple products, maybe you get it to the product level. But if you have hundreds of SKUs, product IDs, we're going to usually then use our subscription management system to report at that level of detail. So the first thing I always look at is the revenue area in our chart of accounts. And then expense definition, so important. So again, just like the revenue section, we have to have enough detail here in order to perform a proper financial analysis and roll this up correctly into the SaaS P&L structure. And there was a question, I think from Christina, do you limit the chart of accounts or customize? Definitely. Yeah, usually there's a bit of customization, especially in the revenue section. Expenses, pretty straightforward in SaaS. 70 to 80% of the expense on a P&L is employee related. So we've got to get that correct. So that's an area I look at: wages, taxes, bonuses, commissions, benefits. just making sure we have good detail there. We're not lumping bonuses and commissions together because we forecast those completely differently. We accrue those in a completely different manner. Then R&D cap, if you're a SaaS company or client, or if you're in SaaS, if you're capitalizing credit, that has to have enough detail as well. And then marketing, another big expense area within SaaS companies. I like to see some, rather than that's just general, generic marketing account that comes out of QuickBooks, maybe we code these by the different channels of customer acquisition. Do we have user conferences, paid ads, SEO, whatever it might be? Really important so we can have that detail to provide to our marketing team. And then non-op, right? Non-op, I like to have its own section, interest, income, expense, etc. So just a couple areas that I focus within a SaaS company to make sure we have enough detail, especially in the people area, and keeping contractors separate, having contractors in their own line and not lumping those in with employee wages.
Well, and Evercast has been around for almost 10 years now, and our chart of accounts became a little messy, but with Giraffe, we didn't have to redo our QuickBooks chart of accounts at all because of the mapping feature that I'm sure Ryan will show you in the upcoming demo. But the mapping feature that Giraffe has, where you can basically create your own chart of accounts in Giraffe and map your QuickBooks or other software chart of accounts to those, is just a huge time saver. And the fact that you can pull in all the actual data from from QuickBooks or from Xero, whatever, pull in all the actuals and link it to your forecast it's very, very, very powerful.
Okay, great. Before we move on, it's time for our next poll. And the question is, how many departments does your SaaS company have? And well, if you're a firm or if you're a fractional CFO advising people, most clients, how many departments do they have? Okay, just a few more seconds. I think there's no other answers coming in. So we are seeing about a half are, I'm going to share the results there. So we see about half the group has 2 to 5 departments, but there's almost 20% who are not planning by departments yet. And I think you'll find the next section very helpful.
Yep, and planning by departments is really important, in my opinion. And Giraffe is a huge help with that.
Yep, definitely. So the next area that you see is department coding. And so to create that proper SaaS P&L structure, to have budgets, to have forecasts, to keep our department leaders accountable, we have to have department level coding. And then while we're transitioning slides here, there's a question from Jerry on travel expenses. So again, this is really important in talking about department coding. Every expense attributable back to those departments should be coded back to them. So if your services team is traveling, if your customer success team is traveling, and we've got those coded to COGS, travel goes to their departments. If your sales team travels, that's in sales down in OpEx. So we want to make sure departments are fully burdened, that they get the expense that they're spending, that they're managing. Now, maybe you have some allocations, benefits get allocated up to the departments, but travel definitely should follow the person who's traveling. So with department coding so important, like travel, a lot of the P&Ls I look at, you just have this one GL travel account, but you don't know if that's sales, marketing, the CEO, the founder, customer success, whoever it might be. We don't know where we're spending, and travel can be a big expense within SaaS companies. So we want to avoid that big bucket of expenses when we manage our SaaS P&L. So department coding, and every accounting system is different. You may have classes in QuickBooks and category or departments, categories in Xero. It's all the conventions are different. but we want to code all expenses to the department level. So for example, we're coding travel to that GL travel account. That next step, so easy, is to then just pick the department, the dimension that travel was associated with. And again, each one looks a little different, but common departments within SaaS, we have tech support, customer success, services, DevOps, R&D, sales, marketing, and G&A. Usually those are the out-of-box pure play SaaS departments that I'm going to set up on my SaaS P&L. There could be a couple more in COGS depending on our revenue streams, but so important because this will make our life so much easier in financial analysis and then creating our proper SaaS P&L format.
And because of departments, you can share a giraffe account with different team members within your company. So for example, like we'll share a giraffe account with our CMO and our CTO, and those executives can only see the information that's relative to their department, which is fantastic because every month when we close the books, they're able to see in real time exactly not only how much their department spent, but they can also see what we've agreed upon as a forecast into the future, right? So it really helps you, that sharing ability on Giraffe really helps you stay in alignment with your executive team and make sure that everyone's kind of staying on budget. Super valuable.
And then finally, revenue recognition. So the revenue management side. And, as we talk about this, as the SaaS companies progress, right, just managing their company with their bank account, their cash balance, maybe then that cash P&L. But usually I say around 3 million ARR is when we have to get serious about revenue recognition because the company is scaling, we're investing in the business, maybe we took on some outside investment, and now we have to have that proper SaaS P&L set up. So our gross profit margins are accurate every month, for example, so we can manage our business effectively. So if we go to the next slide. So on revenue recognition, I have two examples here. One is a P&L without RevRec, so that gray section above, that top gray P&L. And this is a dead giveaway that there's no revenue management in place. You can see our recurring revenue in January is 50K, bumps down to 25, then up to 225, then down to 75. So definitely revenue management not in place. They probably have a mix of maybe monthly, quarterly, semi-annual, annual invoicing, and then you have seasonality with that. So the problem with this is we really don't understand our economic performance. You can see our gross margin was 84% in January, bumps up to 95%. It's all over the place. Same thing as, when we look at OpEx as a percent of revenue. So it just throws all our metrics off. So eventually, and again, that general rule of thumb, I like to say is around 3 million ARR is thinking about revenue management and putting RevRec in place. And then the bottom P&L, pretty clear. You can see recurring revenue. Oh, actually, it looks like we pasted the same thing down there too, but it should say like 50, 55, 60, and just very consistent going up. And then it's like, okay, either we're invoicing monthly, we don't really put RevRec in place, or we have revenue management in place to truly manage our SaaS business that way. And thinking about the revenue recognition process for SaaS companies, if we're not familiar with it, typically we go through a process from bookings where our sales team wins that opportunity. So we sign that contract with our customer, an executed contract signed by both parties that we call a booking. So we've signed the contract. Nothing happens yet. It's just a booking. It's an executed contract. That contract comes down to the accounting department, and then we invoice the customer. And again, that's just invoicing. It's not cash collection yet. It's not revenue management yet. We just simply invoice the customer so we can get paid. And then finally, when we go through the close process and close the books each month, that's when we apply our revenue management process to then get our deferred revenue correct, get our revenue on our P&L correct, and we follow this process every single month to apply revenue management. And just real quick, and I know for my CPA friends, this looks very familiar, but you think, for revenue recognition within SaaS companies, say we're invoicing our customer a $12,000 annual invoice. So with that invoice, when we invoice the customer, it goes to the balance sheet. And my pet peeve is when we post it to the P&L and then we move that whole balance over to deferred revenue. I like to hit the balance sheet first. So we invoice them for $12,000, we debit accounts receivable, that goes up, and we credit deferred revenue. So that's what happens when we post an invoice. And then of course we apply the rev management process to bring part of that $12,000 in each month. Now that's an annual invoice example. You could be invoicing semi-annually, quarterly, any period longer than a month that you'd apply revenue management to. And sometimes even if you have monthly invoicing and you have a RevRec module in place, it doesn't care. It's still going to apply RevRec to that monthly invoicing unless you exclude it. So a key component to SaaS companies is getting a revenue management process in place. And of course, ASC 606 created a ton of fun within SaaS, and I'm sure other industries, with those changes in some of those frameworks. And then finally, we talked about SaaS P&L structure, chart of accounts, department coding, revenue management. Now, how do we actually score? How do we dashboard our SaaS business to understand the economic performance? Next slide. So this is my SaaS metrics framework. So it's a 5-pillar metrics framework. And you can see at the bottom the accounting foundation. So again, like I said before, I don't even look at metrics until I have my accounting foundation in place. I know we have revenue in place, good expense coding in place. We've got this proper SaaS P&L structure. And now finally, I feel comfortable that I can calculate our SaaS metrics. And I've got 5 pillars here that I score SaaS companies. So we know what's working, what's not working in our company. And also, if you don't have your SaaS metrics in place yet, this acts as your roadmap to put those in place. And you can see that red arrow at the top from left to right is there for a reason. So as our company scales, if you go back one more slide, we're starting from left to right. So if we're 20K MRR, maybe we're just looking at growth metrics. We're not going to calculate efficiency yet. But if we're 10 million ARR, 15, 20 million ARR, we should have a metric calculated in each of these boxes. And then the next slide. So thinking about the financial information cycle within SaaS companies, all those action decisions we're making every day, those end up in our financial statements. That's our scorekeeping process. But then in accounting and finance, it's our job to distill that performance into the actual financial performance, communicate that, and that iterates over and over every month. And out of that process, really important for SaaS companies, is the metrics KPI process. Because again, the SaaS P&L is so important, but we need more than the SaaS P&L to truly manage our business. Again, so many metrics in SaaS, just like other industries. So just make sure right metrics for the right stage of your business. Again, if you're early stage, just starting out, and someone asks you for LTV to CAC, probably too early, just not enough data flowing through your business to accurately calculate that. So right metrics for the right stage. And again, working from left to right, as we put in these metrics in place, and they become more important over time. So my iceberg example. So with SaaS companies, financial statements so important, but that's just the tip of the iceberg. Really, to truly understand the economic performance, what we're investing in their business, what's the ROI of those investments, we have to look underneath the waterline and calculate our SaaS metrics, which I showed you previously in that framework. So accounting foundation, create good financial statements, SaaS P&L, and then finally, we're calculating our SaaS metrics so we can truly guide our business.
And, speaking as a founder, Ben, that slide is actually my favorite slide because as I became more of a mature founder and understanding SaaS metrics and everything, it is amazing how you truly do steer your ship by using those metrics. They're really important. And the only reason why I'm even here right now is because of how much this software has helped me do that at Evercast.
Right, we are about to jump into our demo, and after the demo, I will be sharing the slides. So I'll stop sharing so Ryan can share.
Yeah, and Shreyas, while we do that, you want me to take a few questions here?
Yeah, let's do that.
Sure. Yeah, so Paul had a question. Would milestone invoicing typically be equivalent to rev management? Yeah, on the professional service side, yeah, typically if you have milestone invoicing, so you achieve that a milestone, like say project kickoff, and you invoice 25% of the professional services, yeah, that typically equals then revenue recognition on the professional services side. So yeah, RevRec, very important on the services side, often gets forgotten. We're just thinking about subscription revenue. So really important on the PS side as well, if you have material services invoicing to your company. And then Michael has a question. So what is the magic number? So the SaaS magic number is our quarter over quarter revenue growth times 4 to annualize it, divided by our previous quarter sales and marketing spend. So it's looking at that cost of revenue growth. So really, we'll get into a little SaaS metrics here, but I think really applicable to shorter sales cycle SaaS businesses because we're looking at a quarter or in time, but it's meant to measure the efficiency of our revenue growth. But kind of a pro tip here, actually, it's more than that because we've got downgrades, we've got churn in our revenue streams. So really, we really like to put pressure on our sales and marketing teams, but this is more than that because think CS, think services, et cetera, that has an impact on our revenue stream. So that's the formula for that. And then Vasil has a question, what is NPS, so Net Promoter Score? So it's Net Promoter Score. So it's a customer satisfaction metric. You rate, customers rate you on a scale of 0 to 10. Would they recommend your product and or service? And then you translate that into a -100 to 100 score to see if you have promoters, passives, or detractors in your customer base. And then Mark asked, and Shreyas, just let me know, I can answer this last one. What's the best way to think about cash conversion cycle for SaaS models? Because there's no lower inventory. So cash conversion cycle all depends on the invoicing process. What are your invoicing terms? Are you invoicing annually, semi-annually? Are you invoicing monthly, which can make cash a bit tighter potentially instead of getting that annual invoicing up front? So that's really the cash conversion cycle. Of course, we could have professional services and how we invoice that. So with SaaS companies, really depends on those invoicing terms, those payment terms, and then when we think about the revenue forecast and your cash forecast, of course, we apply revenue management and we spread out, say, an annual invoice, but of course, we could be getting that cash in 2 months for the whole upfront invoice.
Yeah, Ben, well, how about you answer this last one and then.
Okay. Oh, sounds good. Then Paul has a question. Do you typically apply ARR to software license resells? For example, in a SaaS services company that sells services and software licenses. So Paul, I don't know if you do mean, the older model of perpetual licenses, the one-time software sales, and then the maintenance streams. So yeah, that would be a little different if you're recognizing that as one-time software. It would be hard to categorize that. Or ARR, SaaS annual licenses, would go to your ARR number. So if you're invoicing that 12,000 annual license, then that would be part of your ARR number. And of course, it's getting even more complex today with what do you actually include in ARR. But if it's an annual license for subscriptions, that would go to your ARR number.
Right, Ryan.
Okay, great. I'm going to jump into the product just for about 5 to 10 minutes max and share some examples around SaaS P&L. And Brad talked a little bit about how they were able to map things very quickly, right? A lot of you probably already have a P&L in place. Going back and restructuring your P&L in QuickBooks has a lot of implications, also can be very time consuming. So how can you get there a lot faster? How can you get that structure set up to create the foundation and really SaaSify the P&L to help you present the right things to investors, tell the right story, also steer the ship the right way, and also automate a lot of the SaaS metrics that you're trying to create for your business today. Here, I will share my screen. And, I've just jumped right in to our SaaS P&L. This looks probably a lot like, actually exactly like what you saw Ben present in his slide. This system is actually just a demo account pre-built, and we've actually worked with Ben, a lot of Ben's clients for a long time. He's put out a lot of different templates that thousands of people have hundreds plus thousand people have downloaded. And we have a lot of those pre-built in Giraffe. So folks are able to just connect to their QuickBooks or their Xero or NetSuite or Intact system and get a lot of these templates out of the box. And this is a really good example of, here's the P&L, the SaaS P&L that Ben presented. You'll see that not only are we tracking actuals historically, but we're also forecasting out, new customers and bookings and revenue and, OpEx by department, also known as like your functional P&L, the way it's set up here, and also calculating out EBITDA within this exact kind of report. On the left side, you also see a handful of other reports that are out of the box. Now, how do we get to this P&L, right? There's a couple of different ways that we can help our clients get there really quickly. One of the ways is as soon as we connect to your GL, we actually have a really cool capability that allows you to, without changing and needing to go into your historical or into your actual GL, you can manage manually, and you have the ability to rename accounts, add accounts, remap accounts, group accounts together, create a different structure so that now your reporting is, while maybe your GL is set up for, you know, accounting purposes and tax purposes, the reporting that you have for management purposes and budgeting purposes is actually set up and streamlined automatically in Giraffe, and it doesn't create a lot of the overhead that of going back and changing everything in your accounting system. And so that's a capability that people can do in minutes after connecting to Giraffe that allowed me to get that structure that I wanted in the reporting. Another option that we have for folks is we actually can do all this in the reporting. So we can keep your income statement structure the way that you want it, but we can actually create a report template that does all the grouping too. So there's a couple different options and ways to get there, and we help our clients get there really fast and get it set up. So now you can have that reporting pre-created. You don't have to worry about managing it every month when you close your books, and then it's set up to also help you start to calculate out all the key KPIs that you care about in your business. And I've actually just jumped down to this KPI report where I'm tracking budget versus actuals, where for a SaaS company, you know, a lot of the key metrics that you need to track, as well as some that Ben had shown in on his slides earlier, are already pre-built and then also pre-calculated, not only for your historicals, but like Brad had mentioned, right? These KPIs are really something that can help you steer the ship. So once everything is set up in Giraffe, especially on the actual side, that happens all in day one. The reporting is set up and it's structured. Now you can think about, all right, if I go and hire another person, right, and I get into the planning section, how are these new hires going to impact the rest of my model and change the KPIs? So Giraffe creates this interdependent model that ties out the balance sheet and the statement of cash flow, but also all the calculations that you've built or that are pre-built for your KPIs. So then I can quickly see as I add a new planned hire, or I create some drivers for hiring that says, hey, hire a new CSM every 200 customers. That should pick up and update the operating expenses for those specific departments and have it mapped correctly in the forecast. And then also update my SaaS revenue table too. So then I can see, here's all my customers coming in from, you know, Salesforce or HubSpot or Pipedrive, right? That CRM that's tracking historically the information. And then I can have my new customer forecast that maybe could be coming from my pipeline from my CRM, but also can be built off of other assumptions like hiring another person. As all those things are happening in my model, I also want that to update all of my SaaS metrics in my forecast too, and see how those change, right? So as I increase costs for marketing, right, I should see my customer acquisition cost automatically recalculate in my forecast and see how that's going to impact, across the rest of the business. Yeah.
Really quick, let me just chime in and say that staffing, the staffing functionality of Giraffe, if anyone's done that in the spreadsheet, it's an absolute pain in the butt. Be able to actually show your staff and plan for staff so easily the way Giraffe does it is absolutely, I mean, it's amazingly valuable.
Yeah, and like Ben mentioned, right, 70 to 80% of your costs are going to be driven by your headcount. Also, some of the models too that we see a lot of SaaS companies have, like they can either be driven by headcount, or you can do bottoms up through your marketing funnel too. So out of the box, we have a lot of different templates that people can start from. And this example here is just a quota-driven model where we're hiring new reps, right? And I can see those new reps quotas. I can see, how long it takes reps to ramp up, and then that calculates out our weighted reps for the months. And then that times our quotas give us what our MRR goal should be, and then I can quickly forecast out revenue based off of that. So as you're doing your hiring in the staffing module, not only is it going to drive expenses, but with this particular model for the quota driven model, right, it's also going to start driving out your forecast for revenue at the end of the day too. And then what's some of the pre-built, I think I saw a question here earlier too around like bookings, and as you're forecasting out those bookings, a lot of our clients, they're not just collecting the same way for even one product, right? Some are paying monthly, some are paying quarterly, some are paying annually, 3 years at a time, right? And there could be some net delays. And so a lot of our clients, they'll have all that built in to their model. So you're able to forecast out your bookings correctly, but you're also able to forecast out kind of the impacts on cash, depending on kind of the percentage of, clients that are paying monthly versus annual upfront and quarterly.
And we even at Evercast, we build out like our hosting costs. For example, we model out these drivers based on how many clients we have and how much we estimate each Evercast room will cost us. And we also model out when we have new, like I think it's every 150 new clients, we bring in one new account manager. And like he said that I can associate all the upfront costs of what it actually costs Evercast to acquire that employee. So, new computers and all that, upfront expense for new employees, we can build drivers for that. So it automatically does it for you. Makes it very easy.
Yeah. And in this example here, if I'm planning by department, right, I can start to build in like key assumptions, like Brad was mentioning. And so, maybe there's a CRM license cost here of $450. As I build these assumptions in, now they're set. So as I go and hire people, I don't need to worry about updating every single part of my model that maybe ties back to that new hire. It's all automatically going to flow through. And I just need to worry about like, what are the key levers in the business, and maybe my costs are increasing, so I need to update my model for, instead of $450, it could be $500, right, or $600 for CRM costs. So as you toggle these key assumptions, you'll be able to see how that impacts the model as well.
And this is the type of stuff that investors love, because it really shows that you're giving a lot of thought into what it takes to operate your company.
Ryan, we have a few product related questions.
Sure.
Abigail asks, I saw MRR numbers in the KPI section. Does Giraffe help calculate MRR, like new, expansion, churn? And if so, is there an ability to do this linked to specific clients?
Yeah, I think I already answered Paul's question, which was about where does the new customer data feed come, where is that coming from? And again, that can be coming from your source of information, which most of the time it's your CRM, or it could be a system like Maxio too that is doing all your kind of revenue, kind of detailed revenue tracking. And Ben kind of talked a little bit about that might be something that you use outside of your GL. And then you saw the MRR numbers being calculated. Yeah, so Giraffe has the ability to really calculate your MRR numbers in multiple ways, in like many different ways, right? And so as we work with our clients and help them get set up, if they choose to decide that they want to do it by customer, that's one of the ways that they can go. If they want to do it by cohort, right, and they want to look at their customers as like small, medium, and large groups, and maybe they just focus on the extra enterprise clients that they kind of model out individually. Our goal is to help you create the right model, so you can understand the direction of the business, but also manage it with ease too, and help you achieve the outcome. So yes, we can do it by customer, but there's also other ways too, and we'll help guide you on the best way to do that. Is Giraffe planning on building a SaaS business template to serve as a starting point for businesses, or does all of this Giraffe have to be set up to be custom built? I love that question. I almost feel like we planted that person here, because we've actually pre-built. What you see here, all this is templatized. So I already talked about Ben having a bunch of having actually many templates and having 100,000 plus people download those. We already have all these templates built out of the box, and we have a best practice SaaS template set up for you. And we've also launched, and we'll announce it here in the next month or so, and actually a program called the SaaS Safari, which is built around these starting places. We have over 4,000 businesses on the platform. So especially for the SaaS industry, we've pre-built all of your KPIs, your reporting, as well as a lot of different options of models that you can start from. So you're not starting from scratch, you're starting from a place of best practices, and then we can personalize that for you. And immediately, in the first couple of days, get value and start to kind of work up that success stairway through the rest of your setup process. We do pull in, we do pull in information from Maxio. We can definitely show you how we do that. Jason, Jerry, what are some of the typical challenges in using Giraffe? I think using any new software, there's always challenges. And so, and it's just like learning how to use a new software, right? So our goal, especially with the Success Safari, is and that journey that we want to take customers on is how do we get you value as fast as possible and make sure that you're getting up and running and understanding how to use the system and trained. I think that's the most important thing that a lot of software companies have to overcome. And I think we've done a very good job in helping think through that. I don't know, Brad, if you have anything to add to that.
I mean, well, just speaking from experience, and I started with you guys before there were any templates. So your onboarding process is just incredible. You spent time with me, got me to help me learn the system. And then I forgot who it was that onboarded me, but one of the things they said that really helped me kind of blast through this and really figure it out was that this really is like a spreadsheet. Like, for example, what Ryan is showing here on the left-hand side, just picture those as tabs. Instead of the tabs in a spreadsheet being on the bottom, they're on the left. And you can basically use your drivers / equations, and you can point to any of the data in any of those tabs. So it's very, very similar to a spreadsheet, but it's not a spreadsheet because spreadsheets are easy to mess up, especially when it comes to formulas and all that type of stuff. So you got to kind of look at it as like a spreadsheet, except the tabs, instead of being on the bottom, are on the left. Awesome.
Somebody's also asked, it's awesome that just to see that you have templates for SaaS, but you have other industries. The answer is yes. We actually have about 10 industry templates that you can start from now, along with all the KPIs, models, and reporting set up for each industry for best practices from that best practice spot. How do we access the SaaS templates? If you want to set up some time with Giraffe, we'll give you access to the templates and help you get started with a trial that starts with those templates too. And we'll have somebody on the team even help you kind of set it up and talk you through and answer some questions to see if it's a good fit for you. How does forecasting work for financing, like credit lines, debt, and the statement of cash flows? That's a great question. So one of the strengths of Giraffe is like as soon as you connect, like our system is built around your 3 financial statements. We care about the debits and credits. We are a financing platform, but everything has to tie out at the end of the day, especially when you're doing modeling. I was talking to a partner and client about this the other day, and that's one of the things that they really appreciated about our platform is that, obviously it's a FP&A platform, but we do care about the debits and credits and making sure that everything is always tying out and you don't have to worry about that. So modeling the balance sheet and modeling examples of financing and debt is something that we do really well. In fact, I think in this actual example, I'm just going to go to our driver section. So this is where you can see all my calculations in one place. And let's see here. I have actually a lot of different drivers here that can help answer that. So I have,
and just really quick, just so in case to make sure everyone knows that a driver is basically an equation.
Correct.
It's a formula or a formula, whatever you want to call it, but yes.
Yep. Perfect. Thank you. And so you have the ability to increase and decrease different pieces of your balance sheet. And that's what I'm doing here. You'll see I've got this loan payment loan draw, loan payment, loan amortization, all built out as a formula in the system. So it's automatically capturing that. So the loan payments of $25,000 a month, they're automatically going to hit liabilities onto the balance sheet. And that's the output. So we also have a lot of different help sections that also kind of outline like how that's built in Giraffe step by step on how to do it.
Hey,
Do
hey,
integration
Ryan, really
such,
quick.
yeah,
I'm sorry, really quick. Can you show, I think one thing that would be actually helpful here is, can you show them, go back to Giraffe, and can you show them how you create a, like go to one of your custom tables or whatever and show how you create a formula, like show the
Yeah.
actual interface so they can see how it all ties together.
Yeah. In fact, here I'm sitting on OpEx. So why don't we just do something simple that everybody understands? Employer taxes. Here is how I build out a formula for employer taxes, right? I'll just make this as a percentage of salary. So I'm going to add a new driver. Let's do a custom driver, and I'm going to select my formula. And so I know that this is going to be it's going to be salaries for this department. I could go down to role if I want, times. And then now I'm going to select my key assumptions tables, and you'll see I've got a lot of different assumptions tables built out for different parts of the model. Here's my payroll section, all the different assumptions, and there's my payroll tax rate. I'll select that. As soon as I select that, calculation is automatically built out for the forecast. Now, as assumptions change, right, tax rate changes, I can update that. That'll impact the model. I hire another person in that department, salaries goes up. That'll also impact the forecast for taxes. So very easy to, in a human readable format, to create a formula. Do integrations such as Salesforce and Maxio fall under premium integrations? That's yes, Sean, that is correct. I've been struggling, with learning curve of the system. What's a good way? So I recommend we've got training set up. We also have our account management team set up. I recommend that everybody has different ways that they learn. We have our director of L&E holds 3 different training sessions a week, and to join those, but we also have office hours for one-on-one time that we can take people through and really just more customize it to your use case. And then if you go through setup and implementation, we also have custom training built for you then.
Yeah, and speaking from experience, I didn't get it right away either, just to be honest. So what I would do is, as I started using the platform, I would just write down the things that you don't understand and bring it to the team at Giraffe. And over time, it just started clicking and the light bulbs start going off. And at a certain point, I finally realized I really knew how to use the platform. So it's important to write down the specific questions that you have that you're not understanding.
Yeah. And and then also that help center that I was on for a brief minute, like there's a question about how do I model out a loan? There's I could just type that in and you're going to get a help article with step-by-step instructions and a video on how to do that. So not only do we provide you with live resource to help you with anything you need, but also continue to build up our help center to do that. Is Giraffe a good fit for consultant to use for a startup or for a small client base? Yes, absolutely. We have many consultants. We have a partner program. Giraffe is also the exclusive partner of the AICPA and CPA.com. So, we understand that obviously we work with a lot of founders and finance professionals that are operators for that direct company, but for the small mid-market space, there's a lot of our clients are actually serviced by outsource CFOs and consultants. And so we have a program set up and a specific training set up for our consultants too. And we can talk to you about that program. Are there any other industries that you don't work with? There are many industries that we work with. Actually, there are a lot of industries that we work with. And on our website, we specifically call out right now, like the top 6 or 7. We've got about 10 industry templates that you can start from. I would say there hasn't really been any industry that we don't work with. There are some limitations for like restaurants right now because of the type of the reporting they need. And outside of that, I can't think of anything off the top of my head. We are a partner with Giraffe to manage our clients. How do we get access to the industry specific templates? Yes, Kim, you can reach out to your customer, to your account manager, and we can get you access to those templates right away. Are you able to customize the timing of AR receipts to have more accurate cash flow other than the options of 0, 30, and net 30, net 60? Yes. You set and when you're doing the setup in Giraffe, you create like your normal net delays for AR and AP. But if you guys also saw, when I was sitting on that driver section, I can go in and create specific calculations for my balance sheet so I can customize the ins and outs of cash, because I might have a specific account that revenue account that everything that hits there is a net, is a different delay, right? So I can customize the delays by product, by account in my GL, however you want to do that. Yes. Are you doing anything around 606 commissions? I don't know. I do know that I'm not the specialist on that, so I don't want to answer that one. But we can definitely get you an answer back on that, Jason. John Katona, Ben Murray personally used Giraffe to support his clients. Ben, question is for you.
Yeah, hey John. Yeah, thanks for checking out my content. So yeah, for me, for my fractional clients, it's really whatever software they may happen to be on. I actually have had a client on Giraffe, so I use Giraffe for that client. But the space I work in, for the most part, they just have an accounting system, and that's about it. So usually, I'm relying on my spreadsheets that I've built up over time.
Right. Any more questions for Ben? Please go ahead and add them in. Otherwise, I've also shared the link for the slides from today, and some of the key takeaways were that setting up a good SaaS P&L, chart of accounts, proper department coding, and revenue recognition are those areas that are important, those 4 common areas of mistakes we called out at the beginning. And you really need to look at the full picture and use relevant metrics for your growth stage. And Ben shared some of what those ARR milestones might be. And then finally, we looked at Giraffe, a product demo, and we, of course, would like you to consider using Giraffe if you're not already. We do have time for Q&A, but I wanted to share that you can stay in touch with Ben on all of the information is here in the slide deck. And Ben also has a special offer where he's giving 50% off his metrics crash course with CPE credit. I'll paste that in the chat as well. But with that, I'll stop sharing. And in the last few minutes we have, if there's any questions for us, please let us know. There will be a survey at the end of the webinar when you close out, and just please give us feedback on what other content you would like to see from us, whether you thought the length of this webinar was good, and anything else you want to share.
I think it's also important to mention that when Ryan was screen sharing, there's plans and there's reports. Plans is where you build out your plans, and reports are fully customizable, and that's what you would show to your investors or to your board or anything like that. So everything is completely customizable, both on the building plan side and the report side, where you're actually delivering, PDFs and stuff to important investors and board members. I even did something the other day, Ryan, where we're bringing in new salespeople at Evercast, and I was able to delay the impact that those salespeople would have on revenue for about 3 months, because we figure, by the time they get in and they learn the platform and stuff like that, they're not going to have any direct influence on revenue for at least 2 to 3 months. So in Giraffe, I was able to easily model that out. So every new salesperson hired that I modeled out in Giraffe, their impact on revenue would not be reflected until 3 months out. So it's things like that it's just a game changer compared to using spreadsheets.
Yeah, exactly. I think that, what we hear, we have a lot of folks that are coming off of Excel and starting to do those things like Excel. Like, I think after 5 tabs, doesn't really scale very well with your business, especially as it's growing and you're wanting to model out and things like the ramp of your reps and getting that to tie out not only to the P&L and the revenue model, but also tie out across the balance sheet and the statement of cash flow. And those are things that, I think our head of operations, who was a customer, likes to say it's almost a tool for mental health, because it removes the risk of your model breaking. right?
Absolutely. Yeah.
And not having to stay
I-
up for 2 days straight trying to fix it.
True story. I blew $1 million investment deal literally because my Excel equations were wrong. They weren't really wrong, but they were wrong enough. And what happens is, as soon as an investor finds something wrong in your Excel, it just leads to like, well, what else is wrong? So, you know, it's not a good situation to be in, especially when you're trying to raise capital or, you know.
Thank you. And with that, very quickly, is there a limit to the amount of departments I can show in Giraffe? I've also pasted a link for our accounting firms for your wholesale pricing options. And we have a partner portal in Giraffe, so you can get more information on that as well.
Yeah, and we typically see people like up to about 20 departments, sometimes a little bit more on Giraffe. So that's usually where we see the kind of the highest number of departments on in the system, but we will occasionally see even more than that too, especially as the clients are larger.
And as a SaaS founder, it's so easy without having this type of software. It's so easy to let expenses get away from you, especially when you have multiple departments. So the fact that this makes it so easy to share that information and basically stay completely in sync with those departments is, again, it's another priceless thing that Giraffe offers, because if your marketing department starts spending more than you realize, it can obviously have a negative impact towards your business.
Yeah. We are over time, and I'm seeing there were some questions that were not answered. We'll be sure to follow up with you because I have captured everyone's names. But thank you everyone for your time, and hope you have a great rest of your day.